Good afternoon. This is Jimin Lim of the IR department at Wemade. Thank you for joining our 2021 fourth quarter and full year joint earnings conference call of Wemade and Wemade Max. Today's event will be held both offline and online. First, to introduce the company's management present today, we have CEO Henry Chang, Head of IR Sang-won Kim, and Head of Finance Yong-bo Kim. We will start with opening remarks by CEO Henry Chang, followed by a presentation on Q4 and full year results by Sang-won Kim before taking your questions. The 21 fourth quarter and full year results presented today have not yet completed auditing by the external auditor and has been provided for your convenience. Therefore, it may change during the auditing process as well as according to the instructions by the Korea Financial Services Commission. We also remind you to refer to the disclaimer included in the presentation material posted on our website. And now CEO Chang will make a few opening remarks. Good afternoon. This is Henry Chang, CEO of Wemade. Thank you for joining today's event. Before going into our detailed results, I would like to share some of our thoughts and execution about blockchain economy, blockchain games, intergame economy, DeFi, expansion, and openness. The blockchain economy consists of three main elements, coin, NFT, and DeFi. And to use a simple analogy, coins are like currency, NFT the goods, DeFi the finance that operates based on that currency and the goods. These elements, working either individually or by combining along multiple dimensions, create the blockchain economy. A blockchain game can be defined as a game that has connected to and absorbed a blockchain economy, and Wemix acts as the platform that enables this transformation of all games into a blockchain game. When a well-made game meets the blockchain economy, the game adds a new layer of playability, leading to more users and revenue. And of course, users can also earn economic benefits by playing the game. Play to earn, P&E, is the term used to describe this new gameplay. On the Wemix platform, games are already issuing their own game coins, NFT, and also offering DeFi service based on that. For example, Mead 4 already issues the game coin DRACO, character NFTs, and also provides a DeFi service called DRACO Staking Program, Hydra Staking Program. We're planning to also launch within the month Mirage, which is an NFT staking service combining NFT and DeFi. The new value created by the blockchain economy is not just at the level of individual games. Given the basic nature of blockchains, which are separable from the game, coins and NFT issued by a certain game can work independent from the game itself. For example, DRACO and Hydra from Mead 4 will soon become usable in Galaxy Tornado. This naturally will lead to a new economy, best described as an intergame economy. The 100 or so games to onboard on Wemix this year will each form a blockchain economy of their own, and also together form a huge intergame economy. Just like the financial sector is far larger than the real economy, DeFi, which is the finance of virtual assets, will become much larger than NFT or coins. Given the degree of freedom of blockchains, the potential is difficult to even imagine. Based on Cleva, which is the leverage yield farming currently in service, we plan to increase the diversity of financial services along one axis, and along the other axis expand the two other chains such as Ethereum. In the name of Wemade and Wemix, we will grow this into a reliable mainstream DeFi. From a macro perspective, blockchains are expected to evolve into a huge ecosystem as multiple chains interconnect based on interoperability. Wemix will continue to maintain a strategy of expansion and continue to invest in and align with competitive blockchains, inspiring projects, DOA with talented people, and well-made games. At the same time, we will continue to make Wemix more competitive and expand the Wemix ecosystem. We plan to build out a main net that befits the current status and future vision of Wemix. Openness would be a basic, and all of the achievements of Wemix up till now will be inherited by the main net. We will present a blockchain that coexists but also competes with other globally recognized blockchains. Wemix is everything to Wemade. It's our most important asset, the most important currency of income, and the most important means of compensation. Once the legal, accounting, and tax regulations are determined, I will be the first one to be paid in Wemix. We are only still at the very first light of a huge wave to follow, and at this point, the most effective strategy is to boldly execute everything imaginable. Execution is everything. To recap, Wemade already operates a blockchain economy with coins, NFT, and DeFi. It is already servicing the world's most successful blockchain game and is building out an intergame economy beyond individual games. Wemade currently services the second largest DeFi in Korea and continues to expand its open ecosystem beyond Wemix. I want to take this opportunity to especially thank everyone who has kept faith in us for the long run and promised to never tire out or give up and put everything we have behind this endeavor. Thank you. Next, our head of IR, Sang-won Kim, will go over the 2021 fourth quarter and full year results. Good afternoon. This is Sang-won Kim, head of IR at Wemade. Before going into our results, I would like to go over some of the latest updates and plans for Q1 2022. 2021 last year was a very meaningful year for Wemade as Mir 4, the new mobile game developed based on our core Mir IP, launched in 170 countries around the world as a Wemix-based blockchain service. We introduced a totally new play and earn experience to users, and Wemade has moved beyond the success of a single blockchain game and is concentrating all its resources on building out a Wemix-based global blockchain game platform ecosystem. First, Wemix platform onboarding will happen rapidly. We have around 20 new blockchain-based games lined up for launch during the first half, including 열혈 강호, Gunship Battle, Total Warfare, Rise of Stars, Dark Eden M, Everytown, Icarus Online, and Project Wemix Sports. Having already climbed up the learning curve, game launch will accelerate, and we plan to have 100 games onboarded within the year. Development of our own games is also moving ahead as scheduled. The new MMORPG Mir M is planning for launch in Korea during the first half and global launch for the Wemix platform version within the year. The Legend of Ymir, which is an MMORPG game in development that reinterprets the Mir universe with a Nordic twist, is scheduled for release early next year. Meanwhile, the Wemix listing in virtual asset exchanges in Korea and overseas is also moving ahead smoothly. During January, Wemix listed in Upbeat, the largest virtual asset exchange in Korea, and the OKX, which is an exchange overseas. Currently, therefore, Wemix is listed on a total of 11 exchanges, that's 4 in Korea and 7 overseas. Also, on January 6th, the Wemix staking service opened, and on January 19th, the DeFi service Cleva protocol was opened, reaching beyond $500 million in total value locked. Also today, with the Wemade's earning announcement, the first quarterly report for Wemix was announced. From November 2021 until end of December 2021, out of a total 1 billion Wemix, 27 million were used directly in the form of Wemix, and 180 million Wemix has been liquidated. 108 million Wemix has been liquidated, which is equivalent to 227.1 billion Korean won in cash. Of that, 27.7 billion Korean won was used as cash. The liquidation ratio, which is the liquidation quantity to trading volume, was around a monthly average of 1.6%. Please refer to the Wemix quarterly report for details, which is planned to be updated every quarter going forward. The company also believes that coin holders should be also duly compensated for the growth and development of the Wemix ecosystem, which is the key currency of the global blockchain game platform. Given that an important indicator of the Wemix development is the Wemix price, we have prepared a burning program tied to the Wemix price. So according to this program, until Wemix reaches $200, 1% of the total issue will be burned for each $10 incremental increase in the Wemix price for a cumulative burning ceiling of 20% of the total Wemix issue. Given that $24 was the peak price since the listing, the company plans to burn 2% of the total issue in the near future. Next is about the company's dividend policy. As you know, the company's dividend policy has been a 30% payout ratio. And for fiscal year 2021, a payout ratio of 30%, excluding the unrealized investment asset valuation gains and gains due to the reflection of the Wemix liquidation on revenue, was applied, resulting in a total dividend payment of 21.5 billion Korean won, or 650 won per share. Of course, the unrealized investment asset valuation gains will be included in our distributable earnings upon their realization, and the company will continue to strive to increase dividends in the future by delivering stronger business results. Now I would like to go over our Q4 tentative consolidated results. First, Q4 revenue was 552.4 billion Korean won, which is a 456% increase QOQ and a 656% increase YOY, with full quarter of MIR4 global revenue being recognized and also Wemix liquidation being reflected on our top line. Operating expense increased by 114% QOQ, reflecting the increased cost tied to the MIR4 global server increases and also the business expansion related expenses. Operating profit was 254 billion Korean won, driven by strong revenue growth. And net profit was 424.7 billion Korean won, which is a dramatic increase quarter on quarter and turning around from a loss-making quarter last year. To share with you the consolidated full-year tentative results, on a full-year basis, we recorded the highest revenue, highest operating profit, and highest net profit in company history. Full-year revenue was 560.7 billion Korean won, which is a 344% increase YOY, driven by MIR4 Global and Wemix Platform Services. Operating profit full year was 325.8 billion Korean won, turning around from a loss-making last 2020. And net profit was 485.1 billion Korean won, also recovering from net loss in 2020 with a reflection of investment asset fair valuation gains and losses. Next are the revenue breakdown for Q4 and some key indicators for the Wemix platform and MIR4 global service. First of all, in terms of the revenue breakdown by platform and license revenue and by region, from the fourth quarter results, we will now combine the mobile and PC online revenue into a single game business revenue number. And so the game revenue for Q4 was 85.3 billion Korean won, which is a huge jump, both Q on Q and YOY, with a full quarter of MIR4 global revenue being recognized. License revenue was 36.7 billion Korean won, which is a 99% increase QOQ and 132% increase YOY due to temporary recognition of existing license agreement revenue. Q4 Wemix platform revenue was 3.6 billion Korean won, which is a 579% increase QOQ. Now that Wemix liquidation is being reflected on our revenue, we started to separately track the Wemix liquidation revenue as a separate line item, and that was 225.5 billion Korean won. Next are some of the Wemix platform and MIR4 metrics. The MAU for Wemix Wallet in Q4 was 1.8 million, which is an 832% growth QOQ. And the MAU for Wemade DEX, our own decentralized exchange, was 100,000 users per month in Q4, which is 872% growth quarter on quarter. Also during the same period, the total transaction volume of Wemix DEX in Q4 was $270 million, which is 826% increase from the $29 million USD in Q3. Next are the Q4 MIR4 MAU was 2.6 million, and peak concurrent users surpassed 1.4 million for MIR4 during November. Also during Q4, revenue was 960.9 billion, which is a 408% increase from the 12.5 billion in third quarter. The MIR4 global revenue breakdown by platform in Q4 was mobile 69%, our own PC launcher 25%, Steam 6%. In terms of user breakdown for MIR4 by platform, 62% was PC, which was much larger than the 37% of mobile platform users. The MIR4 global major metrics in Q4 showing is actually Q1. This quarter is showing daily revenue rebounding to an upward curve versus the previous Q4. And we think that this shows that the MIR4 global Wemix economy system is able to show a continuous growth cycle, much like a regular economic system. In terms of regional breakdown, domestic revenue decreased by 21% QOQ due to the stagnant revenue of existing games, whereas overseas revenue increased by 869% QOQ, with the effects of Mir4 Global and also the Wemix platform revenue. Next is about our operating expenses. Q4 consolidated operating expense was 98.4 billion, which is a 114% increase QOQ and a 98% increase YOY, reflecting the increase in communication costs due to the increased servers for Mir4 Global launch and also the additional hiring to support our business growth. Now that completes the tentative results for Wemade, and I would like to briefly go over the results for Wemade Max. Q4 revenue of Wemade Max was 9.4 billion Korean won, which is a 23% increase QOQ, thanks to revenue contribution from existing key mobile games. Operating expense increased 8% QOQ due to increase in commissions paid related with new game launches. Operating profit recovered from an operating loss in the previous quarter and the fourth quarter of last year, but there was a net loss of 3.2 billion Korean won due to increase in financial costs. On a full year basis, Wemade Max revenue was 35.5 billion Korean won, which is a 6% decrease due to weak mobile game revenue. Operating profit was 400 million Korean won, passing the break-even point by reducing the costs. And net loss was 3.9 billion, reflecting financial expenses, but this is a smaller loss than it recorded last year. Now we will take your questions, both offline and online. If you're on the conference call, please press *1 to ask for an opportunity to ask a question. If you are here in the hall, please hold up your number tag. I have two questions. The first question is about your strategic emphasis. It seems that the company, for example, announcing the burning of the Wemix as well as a huge DRACO buyback program, seems to be focusing a lot of its resources on building out and strengthening the Wemix platform. Do you think that will continue to remain the company's focus, relatively higher priority, or would the company also focus more on, for example, launching games similar to the Mir4 blockchain games? Second question is about the company's revenue related with the DEX. Basically, there will be two main sources of revenue there: the exchange, the fee, the commission that the company collects when the DRACO and Wemix are exchanged, and then there will be the other fee income from the trading of NFT or DRACO. Can you sort of break that down or give us a color of how much that is? To answer your first question, first of all, the Wemix platform and blockchain games are inseparable. Both are very important. Both are key businesses for Wemade. But if you ask where we emphasize more, definitely the company would place a stronger emphasis on the platform. And so to describe what we do develop and we try to acquire and bring on board high quality, well-made games. But that is also a part of building the platform stronger. Now to address the accounting of cryptocurrencies, I think at least compared to other accounting areas globally, it is a less developed field. About the accounting for Wemix, if you look at the Wemix quarterly report, which we announced today for the first time, the company has roughly liquidated around 100 million Wemix, which is cash equivalent around 220 billion Korean won. But to just clarify, that liquidation did not occur in the past one quarter. Actually, it was carried out consistently, steadily since 2020 when it first listed. The reason why it's recognized in one quarter is because actually there wasn't any guidelines of how to account for this. But what we are publishing as our quarterly Wemix report actually are the liquidation and activities that had happened over 2020 and 2021. And to answer your question about how much of our platform revenue is the DEX versus the other trading commissions, at least relative to the accounting for cryptocurrencies such as Wemix, the accounting for game coins such as DRACO are even less developed. And so most of the platform revenue that we recognize for this quarter are based on the DEX revenue, not the other sources that are recognized in the form of DRACO coins. We are the first to go down this path, and I do expect once we continue to talk with the accounting experts and the authorities throughout this year, that we would have some guidelines about how to account for game coins at least before the end of this year. I have two questions. The first question is about the DeFi potential. My basic understanding, maybe I don't know exactly, but is that there is a limit to how much compensation can be provided based on just a single staking, and that's probably the way I understand is the reason why new tokens, for example, the Hydra was issued in order to provide another channel, another source of compensation as a DeFi. Then theoretically, is it possible to infinitely expand the DeFi service by creating new tokens as you did create the Hydra? A second question is about MeetM. The company mentioned that the release will be in first half. Can you give us a bit more color about MeetM? For example, how much daily revenue growth are you expecting from that? Can you divide that by Korea service versus global MeetM service that you're expecting? I think for staking, it could be differentiated into the Wemix staking, which is provided by the Wemix wallet, versus, for example, the Hydra staking program. First of all, for example, the Wemix staking program, so it's based on cryptocurrency. As you mentioned, theoretically, there is a limit, a compensation pool set aside. So the more users, the more that's staked, the compensation that each user would take back would be decreasing. However, at least looking at our Wemix staking program, we have currently a single staking program with 15 million as a limit. It's currently a daily liquidity program, and we still have room to actually provide additional yield. So we are planning to, for example, introduce additional staking programs such as 6-month or 1-year staking program. And then there's the Hydra staking program. Hydra was created. It's a combo coin that takes 20 DRACOs and a game item. We issued the Hydra as part of the Soul Spooning event. It is different from the kind of coins that you mentioned where coins are rolled up and created into different coins and then that happens again. The Hydra is fundamentally based on DRACO, so it is not going to be the type of game coin that begets another game coin infinitively. And so even though the Hydra staking program itself is a type of DeFi, Hydra is also a DeFi at its own level because it's DeFi'd DRACO. The Hydra has brought positive benefits, has contributed to the stability and demand for Mir4. And I think that the idea of, for example, creating a Hydra based on DRACO, that sort of an idea is something we can expand horizontally, as long as that idea is persuasive and also it contributes to the overall economy. About your second question about some guidance of MeetM, I often get questions about guidance, quantitative guidance, and actually we don't have internally any quantitative forecasts or targets regarding our games. Revenue, larger is always better. And so actually we do not have any quantitative targets for MeetM. That said, I think I can give you a comparative expectation that we have about MeetM. First of all, MeetM both shares the Meet IP with Mir4, but compared to Mir4, it's more closer. It has sort of a lineage feel to it. It has quarter view. It also allows some tactical play. And so therefore, MeetM, we think, will be able to address and appeal to a wider audience versus Mir4. On top of that, the company has learned through the Mir4 experience, both the success and the trial and error. And so combining the two, I'm quite confident that MeetM will be more successful, both in Korea and globally compared to Mir4. I have 3 questions. The first question is about how you plan to differentiate yourself from other game companies that are also announcing issues of game coins and other similar activity. You are the first goer, you are the pioneer, but how are you going to differentiate yourselves when others also join? Second question is, I would like to hear your sense of the direction of legal or regulatory evolution regarding these blockchain ecosystems, both in Korea and overseas. Which direction do you think that is going down towards? The third question is about demand. Demand is critical, I think, because, for example, if there's only one game and that game does go through a cycle, there will be a dip in demand. Perhaps a way of countering, balancing off, offsetting that demand cycle would be to add other elements such as entertainment or NFT. In that context, do you think that there's an opportunity for you to collaborate, for example, with Kakao Games? To answer your first question, I think it's only obvious and natural for there to be followers when the first mover goes ahead and succeeds. Now, but that is the abstract concept. And in reality, in order for there to be competition, to be recognized as competition, that competition should have a negative impact on our operation. And that has not been the case thus far. Many companies have announced similar plans as what we are doing, but I don't think we've had any negative impact either on our business operation or stock price due to these announcements. Actually, this has helped actually drive up attention to our business and has been beneficial to our business operation. As I mentioned during the first question, the first question of the afternoon, when I was asked whether we are going to focus more on platforms or games, we identify ourselves as a platform company. Some of the competitors you alluded to actually announce games. They say that they have plans of launching P2E or NFT games, and that's why they are at a different level from where we are playing at a platform level. I think that's one of the reasons why we're not being directly affected. There are other companies that have announced platform business plans, and even if they do actually accomplish what they have announced by the end of this year, we don't see any need to change or revise our strategy or plans because of that. A platform business is the typical business where there is a very strong first mover advantage and a winner take all sort of a mechanism. And as I mentioned during the presentation, Wemade already has a blockchain economy, blockchain games, and DeFi. And so it's very difficult for me to imagine a situation where a latecomer could leapfrog us going forward. And so even if the competitors are able to deliver what they say that they will, I think Wemade will remain the very dominant player in the platform. We will be the dominant platform. And so to answer your question of how we plan to differentiate ourselves, that is simple. We will execute the very well-made strategy and plan we have, and that will get us to #1 position as a platform. Whether it's life or whether it's business, execution is everything. We are already at a point where the only thing we need to do is to grow and expand, improve what we already have. And so it's very difficult for me to imagine a situation where we would not win. To answer your second question of what I see in terms of regulatory movement overseas, I think I can answer that question, one for the crypto or virtual asset related regulations, and the second for blockchain games. At least overseas, what I'm seeing is similar to what I'm seeing here in Korea. The authorities are recognizing that they do need to have a framework to deal with cryptocurrencies or virtual assets and trying to establish the frameworks that are necessary to bring that into part of the mainstream system. Now, for blockchain games, as you know, Korea already had a very strict regulation on games in general, and the regulation against blockchain games actually is an extension of that. In other countries, there wasn't any regulation of games to start out with, and so we're not seeing any particular movements to regulate blockchain games either. Now about your third question, which basically I think, as the way I understand it, is how we're going to address the life cycle of a single game. I think the cue to that, the answer to that is to create an inter-game ecosystem that leverages the characteristics of a blockchain that can actually separate coins or NFT away from the game itself. By separating the coin and NFT away from the game, we can actually create an inter-game ecosystem. Now, that said, I think that the life cycle of a game that is part of an open inter-game ecosystem may have a different profile from the traditional game life cycle that we've seen. Traditional games, for example, Korean games would start at the peak and come down. Other games, for example, would have a cycle. It would go and peak and then come down. Once it comes down, it's very difficult to rebound it, turn it around. A good contrast is what we're seeing on Mir 4. The Mir 4 itself actually peaked in revenue as well as traffic in November. But actually what we did in January was we didn't do any updates to the game itself, but we just introduced new elements to the game economy, and that was enough to turn around the numbers again. It's going up positively, and it's continuing this upward curve from January and even February. And so I think we're learning from Mead 4 that actually by designing the economy around the game very effectively, we're able to actually extend the life cycle, the life of the game. Now, that said, you've also mentioned about entertainment or collectible NFT, and blockchain is a general purpose technology that can be used for other fields than games such as entertainment or collectible NFT. But basically, the company is operating under the assumption that in the future, when there is NFT and metaverses very active, still 90% of that would be games. And that is why we are emphasizing games of different categories, of the other different categories available, such as entertainment, collectible NFT. The company is emphasizing games for this moment. So even though game is on a top priority, we do see a potential down the road for an inter-genre connection of economies, and that's why we are going to still remain interested in other applications of blockchain. You've also mentioned possibilities or asked about Kakao games. Basically, a blockchain comes with openness. It also comes with interoperability. And so we're not limited to just thinking within the frame, the four corners of Wemix. We're going to actively seek alliances, investments, and also opportunities to collaborate with other blockchains. We refer to it as a governance partner. Kakao refers to it to the governance council, but we will take turns participating in the governance. And if there are opportunities down the road to collaborate strategically with Kakao, we will actively leverage those. And we think that in the big picture, that is a way to further strengthen and expand the Wemix ecosystem and enhance the value of Wemix. I have two questions. The first question is about the intergame economy. You mentioned the intergame economy. You said that, for example, DRACO and Hydra could be used in other games. I could see the benefit of that driving up the demand for DRACO or Hydra, but wouldn't there be a reason for other tokens to exist? And so what kind of effect are you thinking of when you are expecting DRACO or allowing DRACO or Hydra to be used in other games? Second question is about your DeFi vision. You mentioned that there is the Cleva protocol going on for Wemix, but I think during your presentation you said that there will also be an expansion to other chains such as Ethereum, other main nets, but I'm wondering how that's going to work, given that, for example, Ethereum is a different main net, it's a different chain. So how does that work with Wemix, and does this have anything to do with, for example, replacing or building out a main net for Wemix? To answer your first question, if you approach an economy from a zero-sum approach, of course, if one side gains, that means the other side must lose. But in the real economy, we know that things are much more complex than that. That in some cases, when one side gains, the other also gains, or one side loses, the other also loses. And so, admitting the complexity of the economy, I cannot actually predict how things will pan out. But my belief is that there will be a plus-sum economy created between games. This, I think, was realized or recognized when the Hydra was announced. When Hydra was announced, people expected that that would actually make DRACO prices drop, but actually both DRACO and Hydra prices have gone up. I think this sort of a positive plus-sum economy can be created between games. And of course, this does not mean that all games will benefit. The games that have the better economic system will benefit from a stronger ecosystem. And I think, for example, this will show up in the form of a new game that allows DRACO, if that's announced or released, then users that already have DRACO from other games will be more likely to play that game. Now, to answer your second question, technically speaking, because the Wemix is Clayton-based and Clayton is an Ethereum fork, I would think technically it will be not very difficult to convert that back to Ethereum. But actually, that was not what I was referring to when I said we plan to, on one axis, diversify to other chains. What I have in mind is actually to change the DeFi service to different program languages. Currently, we have the DeFi running on the Clayton mainnet. What I'm referring to when I say diversify to other chains or expand to other chains is to offer the same DeFi service by programming that with different programming languages on other chains and other mainnets, including Ethereum. And so what we are thinking is that chains will have interoperability, and therefore scaling the DeFi service across different chains would actually benefit the DeFi service itself, which will ultimately also benefit Wemix. It's quite a complex situation, and we've already seen this happen before. For example, when we originally planned the Cleva, we weren't thinking of introducing a Wemix staking protocol or program because this was back in summer of 2021. Wemix did not have the status it has today, but it has developed in terms of it has increased its status, and that's why we have introduced a Wemix staking program in Cleva, which has also helped actually increase the TVL of Cleva itself. So it's mutually beneficial. Wemix is our most precious asset, but I don't think we will be increasing the value of Wemix by holding on to it ourselves. I think the key to enhancing and developing the value of our precious Wemix is actually to go down the openness road and to compete and collaborate with other competing chains. That will be the approach that we have. And this also ties in with our plans of building out a mainnet for Wemix itself, its own mainnet, which may happen earlier or end of this year or even earlier. We want to create a mainnet for Wemix where other developers can be invited and work together. History has taught us that closing borders is not the way to become a prosperous country. And I think the same goes for Wemix. Openness and expansion is the right strategy for enhancing the competitiveness and value of Wemix, especially given the openness and interoperability nature inherent to the blockchain. We think that that is the only way to enhance the value of Wemix and the ecosystem. I have two questions. First question is about the liquidation revenue, the Wemix liquidation revenue, which the company recognized in fourth quarter. You did say that that number, even though it was recognized as one number, actually was liquidation that happened over a long period of time. So I'm curious, what sort of liquidation scale does the company plan to do going forward? How much of liquidation would you do on a regular basis going forward? Is that schedule or plan based on number of Wemix, or is that more of a value-based plan? Second question is, how much of total distribution or float does the Wemix group plan to account for in terms of the Wemix trading volume? To answer your question, I would have to divide that into our previous policy and what we plan to do going forward. Up till now, in the past, the company has been liquidating the Wemix mainly as a way of funding its very aggressive and active investment program. And if you look to the Wemix quarterly report that we've announced today, it actually breaks down the liquidation over time, and you will see that the liquidation happened very steadily from month to month. Now, of course, last month, the market said that the company is expected to transparently disclose its liquidation of Wemix, and we fully agree with that critique and feedback. And that is why we announced that going forward, if we resume liquidation, once the market stabilizes, we will be pre-disclosing our liquidation plan, similar to how a company currently would announce its buyback program for shares. So going forward, if we reboot our liquidation, we will announce ahead of that the number of Wemix that we plan to liquidate, the amount, the value of that, and also the duration, the period during which that liquidation will happen. And so to answer your first question, the company currently does not have any liquidation plans, either in number of units or in terms of Korean won or value. It will liquidate going forward when we have a specific investment need that requires that liquidation, and that will be announced ahead of time to the market. The framework that I am operating from is that from a long-term perspective, currently the achievements that Wemade has made up till now is only probably 1% of what Wemade will be achieving in the long term. So that said, the market is also currently only 1% of what I believe is the long-term potential of that market. And that is why I do not actually have a long-term program for the Wemix, because either for the share of distribution in the market, because what we are currently seeing now is only a very small fraction of what I expect this to be in the long term. Well, the question was about the revenue recognition of the platform business. So you mentioned that the revenue, the fee income that the company recognizes from the DEX and also the 0.9% fee has been recognized as the company's platform revenue. But I think that also leaves out then the NFT marketplace 5% commission that the company receives. The company has not disclosed the trading volume of the NFT marketplace either. And I think you said that the accounting guidelines for that will only be established closer to fourth quarter of this year. Now, if we connect that to your plan of onboarding 100 games on the Wemix platform, from Wemade's perspective, the main revenue source of these onboarded games would be the transactions and the fee income that the company would receive from the NFT marketplace transactions and the Wemix wallet transactions. But if you're not able to recognize that on your books, the benefit of that 100 game onboarding may not show up on your books within this year. So I'm just wondering, what are the key issues that are holding back this recognition, at least in terms of an accounting guideline perspective? And the answer to that, first of all, is there needs to be a differentiation of accounting guidelines for Wemix, the cryptocurrency, versus game coins. Wemix accounting guidelines have already been established, and that's why we were able to recognize the liquidation revenue onto our revenue, and also we were able to recognize the Wemix currency-based revenue that we receive from the DEX. Also, we did recognize the NFT transaction fees, but that actually is only 1 month's worth in December. So we did not highlight that during today's presentation. But going forward, the company will provide numbers in terms of the CoinDex commission revenue and the NFT marketplace revenue. And since we're on the topic of the NFT marketplace revenue, that was only up for 1 month in December, so I'm assuming that that number would not have been huge in December. But I think going forward, the reason why we're quite confident is because we're planning to launch the NFT staking program. Well, we announced that in January. And the NFT staking program is sort of a place where people can stake their NFT characters. People, if they are resting from gameplay, if they're not playing games, then they can stake that NFT character with the staking program and receive dark steel, which then can be converted to DRACO or Hydra. Internally, we're referring this as a pension program. And having an NFT staking program will create another layer of reason to play and grow your character in the game. So that will also bring more activity to the NFT marketplace. I have several minor questions. First of all, I do notice that your revenue, license revenue for Q4 has increased. Can you give us some more details of why that happened? Also, your labor costs for Q4, can we assume that that would be your routine, regular, recurring labor cost going forward? Third question is about your plans of burning the Wemix. How does that happen? Is that burning going to happen from the Wemix that Wemade, the company, has? Or are you going to buy Wemix off of the market and cancel that, similar to a buyback? of treasury shares. A fourth question is, my understanding of launching a game combined with a coin is that it's more of just a marketing level initiative, but is there a deeper meaning to that? So to answer the first three questions, the license revenue increased this quarter mainly because of accounting standard changes. There was a change of the company's auditor, and the auditor felt that there was different accounting standards that should be applicable, and that's why there was some past license revenue and future license revenue that was recognized in Q4. In actual terms, the license revenue was similar quarter over quarter. The fourth quarter labor costs did have some one-offs. We think that in terms of employee incentives, around 10% of our operating profit should be allocated as employee worker incentives. And so that is counted in the fourth quarter, which was around 10 billion of one-off labor cost. Third question about the burn, the Wemix burning will happen from the Wemix that the company has, not bought from the market. And just to clarify, the base for that 10% of profit, operating profit that's used as the employee incentive excludes any revenue or operating profit that comes from liquidation of Wemix. Now, your fourth question is sort of a high-level question. So a way, if I try to answer that, I guess there are different ways of defining marketing, but just generally defining marketing as attracting customers. Actually, what we have in mind is not as simple as what you see in Meet 4. But then when it comes to game and revenue from games, there's a limit to the role marketing can play. It's more like a drama, a series, rather than a movie. Movie people, you can attract viewers by marketing, having them pay the ticket before they go in. But for a series, a drama, actually that first episode has to be very appealing for them to keep on watching the second and third episode. And that is much more like how a game would operate. When we look at Meet 4, there is a limit to how much marketing could have been effective, because the current user base that Meet 4 has was not the user base we had intended or had in mind when we developed Meet 4. And so unless the game itself was appealing, we would not have this huge user base. And so what we have experienced with Meet 4, which has only been for a span of a couple of months, was that we now have a totally new user behavior called play and earn. There is now a game economy, which is actually changing the profile of a typical game life cycle. And so already, even though we've only had a little glimpse of the potential, it is definitely much more powerful than regular marketing to drive up game usage. I think actually we won't be able to, at this point, imagine what the potential of that. But if you did ask me, I would say that eventually the ultimate point of this would be to become a metaverse. I have two questions. The first question is, if I look at your pre-tax income, there was an increase related with the fair value gains and loss on fair value recognition or fair value evaluation of strategic investment assets. Can you give us a bit more detail of what these strategic investments are? Second question is about recognition of Wemix as your asset on your balance sheet. Wemix is definitely one of the largest assets that the company has, and according to my information, you have around 70% of the total Wemix issuance. But it's not recognized on your books yet. You've started to recognize the liquidation income on your revenue. Can you give us a bit more about the recognition of Wemix as an asset for the company? So regarding that pre-tax increase, income increase, most but not all of that increase is our stake, our ownership in Lionheart, which has the game Odin. As you know, Kakao bought Lionheart at around a value of 5 trillion Korean won. We have 7% stake in Lionheart, which roughly would be 350 billion worth. 350 billion. So that and the difference between the 5 billion we invested is what you see in the strategic investment fair value gains and losses. Now that has not been reflected in our distributable income in terms of calculating the dividends this year. That is because it's not a realized gain yet. We do expect to exit from Lionheart at one point, given that it is a subsidiary of Kakao. And so once we do that exit and have actual cash flow, that cash flow will be put into the base of our 30% payout ratio calculation. Now, regarding your second question, as I mentioned, the accounting guidelines for Wemix cryptocurrency has been established to a certain extent, and that certain extent covers the Wemix that we liquidated, which will be recognized as our revenue, and also the Wemix that we earn by, for example, operating the platform business. That is also recognized on our books as revenue. Now, what's not recognized on our balance sheet as asset is the Wemix that we own, issued and own, that has never been put out into the market. According to the current accounting guidelines, that is not to be recognized on our books. That may be what the conservative accounting approach dictates. Of course, that may not completely accurately reflect the situation of the company, but we will continue to follow the accounting guidelines that evolve in the future as the cryptocurrency market develops. I have a question about your expenses. I think one of the concerns looking at your results this quarter from the market perspective is that actually your operating profit did not come in as high as the market had expected. That seems to be mainly attributable to the higher than expected labor cost and also your other expenses. So can you just tell us if there were any particular one-offs or the size of the one-offs in your labor cost in fourth quarter? What was the size, or for example, compensation offered in the form of stocks or bonuses in Q4, and also of your other expenses, which increased from 5.3 billion to 20 billion. Is that an ongoing recurring level of other expenses that we should expect, or was there any one-offs that we should account for? And if so, how much was that? I will, of course, answer that question, but for the details, please contact our IR team because we do disclose the expense items in further detail, and they'll be able to help you out. In terms of the operating profit margin for fourth quarter, actually, fourth quarter, if we take out the liquidation revenue, we recorded a revenue around 100 billion. Operating profit was 30 billion. So we are at a 30% operating profit. And if we account for the one-off labor cost, which was the bonuses that we paid out, as I mentioned, was around 10 billion. If we add that back, we would still be at an operating margin of around 30 to 40%. You've also asked about the share compensations that we did in fourth quarter, so that would be recurring because it was introduced for the first time. Also, in terms of the other expenses, main part of the other expenses were the communication costs necessary to support the huge peak in concurrent users. And so as the peak concurrent users have come down, we are expecting that also to come down in sync. I have a question about decentralized and centralized blockchain protocols. I think you've announced, the company has announced various ways of returning value to the Wemix holders, and that has helped the recovery of the Wemix price to a certain extent. But when compared to other protocols, for example, the AXX for Axie Infinity, they actually, I think, are practicing a much more decentralized governance that allows the holders to participate more in the voting. The impression that I get from the Wemix governance is that it is still much more centralized than what would be assumed. And on top of that, in order to onboard the 100 games that you plan to do, you would need to have the investment. And in order to fund that investment, you would need to bring up the Wemix price. And so in that context, Does the company have plans of actually implementing and practicing the decentralized governance policies that it does announce in its white paper? Also, given the fact that going forward, holders would also have a wider option. For example, C2X, Kucoin, or even Netmarble announcing that they will create coins, holders would have other options than to hold Wemix. So are you planning to introduce more decentralized governance than now? To find a way of answering that question cost effectively, I think I can start out with the concept of decentralized, which can be defined according to different dimensions. It could be decentralized, could be a public chain versus a private chain. It could be an issue of governance. For example, the governance being controlled by not a handful of companies, but all coin holders. Decentralized could also refer to the openness of the chain itself. You did mention X Infinity in your question, and to just comment on that, the main reason the prices of that coin going up was the decision to only leave the PVE mode and to reduce the supply volume. But on the other hand, that decision to do that was also taken unilaterally by the company. And so in terms of governance, there are different decisions being made at different levels towards different directions. From Wemade's perspective, and also my belief, is that blockchain is only a means. It's not the object itself. Decentralization is also a means. So as long as decentralization is the cost-effective and efficient way of achieving what we want, of course, we will use decentralization, but that's only the means. So if there are other ways, if decentralization is not always the cost-effective or efficient way, we would seek other approaches. And so our approach to decentralization will be a hybrid. So there will be areas where we would seek complete openness, but there will be other areas where Wemade will maintain control. Because Wemix was created by a company, inherently it was less decentralized compared to other projects. But actually we think that we have designed the optimum level of decentralization for Wemix, that it is where it will be operated most effectively. I do heed the need for greater transparency, given the relatively lower level of decentralization. This was a topic a few days ago on the 3% TV. Mr. Seo Kim did address this, and I totally agree with his point. There was a question and answer regarding the liquidation of Wemix. And the point Mr. Seo Kim mentioned was that given the fact that Wemix inherently has a relatively lower decentralizing level, it would have been important for us to disclose information more actively than other projects, and I totally agree. And that is why we have released the first Wemix quarterly report, even though very brief. Also, going forward, if there are future liquidations, we will disclose the information ahead of time in the beginning and also at the end of that liquidation. And we will reference, for example, the capital market disclosure requirements in doing that. And so we are aware that a way of addressing our relatively lower level of decentralization compared to other projects is to provide more information disclosures and follow and comply with a higher level of transparency. Yes, your question was about the Wemix liquidation, not burn. Previously, the company's policy was to liquidate a certain number of Wemix units, for example, on a steady schedule. But I think today you've announced a different approach, that the company will liquidate Wemix only when it has an investment need for that cash. Now, that would make your revenue quite lumpy, because when there is a liquidation, that will show up as your revenue. This, from the investors' community perspective, would make our job more difficult, because then the revenue and profit will become more lumpy. It will be difficult for us to, for example, have a recurring way of valuating the company. It would be difficult, for example, for us to use a price-earning multiple to evaluate the company. And so the answer to that is, in terms of liquidation, I think a fair way of valuing the company would be to just take out that liquidation from our revenue level and also the operating profit level. That would probably give you a more consistent way of valuating the business. And this is happening temporarily because we are at the very beginning of a very dynamic situation. The company is not expecting to liquidate Wemix forever. Once the ecosystem is on track at a certain level, the company would not need to liquidate Wemix anymore. And so please bear with us as we go through this period in our P&L. I've been the CEO of Wemade for the past 8 years, and for the first 7 of that period, the company did not deliver what I would describe as high performance. But even during that period, there were investors that believed in our capability, our potential, and our IP, and have patiently waited for us. I once again sincerely thank these investors who have stayed with us. Also, the company will continue to communicate more actively with the investor community. We will have communications more often and also at higher quality. And also, we will do our best to deliver even better results next quarter. And that completes our earnings conference call and event for this quarter. Thank you very much.
I believe in miracles since you came along, you sexy thing.